Good evening, America. If you glanced at your 404k or your brokerage account today, you probably noticed a whole lot of green. The S&P 500 is teasing its 8th consecutive weekly gain. But the real earthquake today isn't happening on the trading floor in New York. It's happening right inside the White House. Today, May 22, 2026, Kevin Warsh was officially sworn in as the new chair of the Federal Reserve. Now, if you're wondering, why should I care about a guy taking a new government job? Here's the bottom line. This man now holds the remote control to the entire U.S. economy. His decisions will directly dictate how much you pay for your next car loan, what your credit card interest looks like, and whether the price of your weekly groceries finally stops climbing. Let's talk about who Kevin Warsh actually is, because this isn't your typical academic appointment. At just 56 years old, Warsh is a Wall Street veteran. He's a former Morgan Stanley guy, a former member of the Fed Board of Governors during the absolute chaos of the 2008 financial crisis, and crucially, he is known for being a pragmatist rather than an ivory tower theorist. The big question everyone on Wall Street is whispering today: what happens to our money now? For the last few years, Americans have been caught in a brutal tug-of-war with inflation. The previous Fed regime kept rates high to cool the economy down, leaving homebuyers stranded with 6.5% mortgage rates. Warsh is stepping into a literal economic minefield. He's got to balance a remarkably resilient U.S. job market against worsening consumer sentiment driven by Middle East energy shocks. Critics are already wondering if he's going to cut rates quickly to stimulate growth, or if he'll hold the line to completely kill off inflation. Joining us now is our senior markets correspondent. Dan, Wall Street seems to love the appointment today, but what's the vibe behind closed doors? Are we looking at a hawk who will keep rates tough, or a dove who wants to ease the pressure on the American consumer? Dan, analyst. Look, Kevin Warsh is a market guy, plain and simple. He understands how traders think. The street is optimistic because they expect him to bring more predictability to central banking. But let's be real, the honeymoon phase lasts about 5 minutes. If oil keeps hovering near $96 a barrel and retail numbers don't stabilize, Warsh is going to have to make some incredibly unpopular choices very early in his term. Unpopular choices in an election-adjacent cycle. Sounds like the toughest job in Washington. Dan, thanks. The ink is dry on the oath of office, and Kevin Warsh is officially in the driver's seat. For every American hoping for a break on their mortgage or waiting for a sign that the economy is finally stabilizing, all eyes are now on the Fed. We'll track his every move. I'm reporting from Washington. Stay tuned, your money is up next.